My name's Mark Cormack. I'm a director with Pinnacle Investment, and it's great to be back with the Plato team to discuss Australian companies' reporting season and their dividend analysis. Today, I'm delighted to be joined by Dr. Peter Gardner, a senior portfolio manager at Plato, whose primary responsibility is managing the Plato Australian Shares Income Fund. Pete, thanks for joining me.
Thanks for having me, Mark.
Okay, let's kick off. CBA reported their results today. What were the key highlights?
So overall, it was a good result from CBA. The profit was down 2% on last year, which was just above market expectations, actually. But the real highlight of the result was actually them increasing their dividend by 4.2% up to $2.50 per share, which equates to a kind of 5% annual gross yield after they've had really strong recent performance, like share price performance. Now, what's interesting to note is that the payout ratio has gone up to 79%, which is the top of their 70 to 80% range. And they flagged in their result that the franking neutral payout ratio was 80%. So that means they've got enough franking credits in order to pay out 80% of their profits at a fully franked rate. And so we actually think going forward from here, dividends will probably only rise in line with profits rather than the last few results where they've been able to increase dividends more than their profits going forward. Now, their net interest margin was 2%, which was 3 basis points above market expectations and actually went up on what they received in the first half. And that was largely because CBA had flagged that they've increased the loans that they've been making to higher margin clients, such as either investors in property or also interest-only kind of loans. So CBA are trying to increase the margins a little bit through doing that. Now, they've got a lot of capital, 12.3%. And they've only completed $282 million of their $1 billion buyback, which potentially shows you that CBA does see their shares as a little bit overvalued, given that they haven't been buying back at these kind of rates. But one of the reasons why their share price has done so well is that bad debts have maintained their low rate. And the bad debts are still 9 basis points, which is lower than it was last year. And while we've seen home loan arrears pick up a little bit, they're still at pre-COVID levels. So yeah, overall, a pretty good result from CBA.
Now, Pete, the consumer's been under pressure. JB Hi-Fi reported on Monday. Net profit was down. Share price has been super strong. Can you take us through that result?
Yeah, well, before I take you through the JB Hi-Fi result, I'll actually show you, which I think impacts the JB Hi-Fi result, a slide from CBA, which shows you their general kind of cost of living impacts. And they break this down in terms of the spending and also the kind of saving by the different age categories. And so we've obviously heard a lot about a crunch coming, and that's definitely been the case for the younger age brackets, where we've seen, for example, the spending on discretionary items reduced by 1.7% for the 20 to 24-year-old age bracket, or reduced by 1% for the 25 to 34-year-old age bracket. So they're definitely getting hit significantly. But as you go up the age brackets, you can actually see that the older age brackets are actually still spending quite strongly. And that's one of the reasons, and still saving as well. So if you look at over 65 plus, they've increased their spending on discretionary items by 4.8%, and their savings have gone up 7% as well. And so the spending on essentials has stayed quite similar across the age bracket, but you definitely notice spending on discretionary items change significantly. And so if we move into the JB Hi-Fi result, you actually see their sales were down 0.4%. So they've been experiencing some of that pressure, and their profits, their EPS is actually down 16.4%, but that was well above market expectations. And it really does show you when you're analyzing results that it's all about what the market is expecting, because we've been hearing for a long time about the kind of spending cliff and the people are under pressure. And so everyone's been forecasting these consumer discretionary stocks like JB Hi-Fi to reduce their profits significantly. And so their profits only being down 16.4% was actually a really strong result and 4% above market expectations. And when you look at their sales from July, you can actually see that they're growing strongly again. And so JB Hi-Fi Australia, their sales were up 5.6% in July of 2024. And JB Hi-Fi New Zealand was actually up 12.2%. And so now that we've had the tax breaks come through, people are expecting spending to actually go up from here. And that's been a pretty good result from JB Hi-Fi. But again, the highlight of their results, similar to CBA, was that they were able to declare an 80-cent special dividend. So their dividends have now increased to 183 cents for this half. And so that was a 59% increase if you include the special dividend, albeit the underlying was actually down 10% given the drop in profits. So that equates to a yield of 6.5% when you include the franking credits on an 85% payout ratio. So a very good result from JB Hi-Fi.
Thanks, Pete. And that's another great example of a stock that Plato's held for a long time, delivering both capital growth and that growing income stream. Now, Pete, any other quick key highlights of reporting season so far?
Yeah, so just run you through quickly. Some of the good results out there in the last couple of days have been AGL Energy, Seven Group, Challenger, and Carsales. And then some of the disappointing results were from CSL, where they were pretty conservative with their guidance, albeit it's bouncing a bit back today, and also Horizon and Seek, which had pretty disappointing results as well.
Look, thanks, Pete. And just as a reminder, the Plato Australian Shares Income Fund has delivered over 9.6% per annum income and outperformed the index on a total return basis since its inception. That's well over a decade. As always, Plato shows there's plenty of income in Australian equities. You've got to be tactical, nimble, and certainly know where to look. Now, if after any further information on Australian equity income investing, please do not hesitate to look at the Plato website, www.plato.com.au, or contact your Pinnacle distribution team member. Thanks for watching and have a great day.
Thanks, everyone.